Hello smart money traders, welcome back here. In this video we're going to do a weekly top-down analysis on the dollar index to determine the directional bias of the dollar for the week. If you're trading any dollar paired currency or any asset that has the United States dollar, you need to do this every week to be able to know exactly what the dollar will do for the week. And today is Sunday, which means tomorrow Monday the markets will be open. That's why we need to do this to have an idea of what may unfold for the week. You can find dollar index on TradingView by simply typing DXY. It is basically an indices that measures the strength of the United States dollar. So let's get into this top-down analysis. They actually have an inverse relationship. If the dollar is to trade up, it means foreign currencies are going to trade down for that particular week. So let's get this properly, and then we'll know exactly what some of these foreign currencies will do. We'll finish this top-down analysis on DXY and pick any of these and look out for what may unfold for the week. So let's get into that. Let me delete this quickly and then have a clear chart. Now we have a very recent data from the monthly time frame. We have price traded up to this level. We don't know what happened before price started coming down to this level. If we zoom in, we are basically going to see what really happened. Price actually traded into this mitigation block. Look at this mitigation block, and then price has been coming down for the past few months. I look at this, and then I've seen price taking out this level. It took out this level, took out this level, took out this level. That means price is really bearish for the past few months on the dollar. Now we've traded down into a fair value gap right here, and that fair value gap is very strong because if we pick our Fibonacci tool and measure what is happening from premium and discount perspective, we're going to see that price have actually traded into a discount area. If you pick your Fibonacci tool and measure from this swing low and swing high, the middle of that Fibonacci tool is basically what we call equilibrium. Above it, anything above it is called premium, and you are expected to sell from that place, and then below it is called discount. You can take buys from there. And then right here we have this institutional reference point that is called fair value gap right here at a discount area, and price traded into this area and then started moving up again. Look at what happened after price traded into this discount and found this fair value gap. Price quickly push up into this volume imbalance. Volume imbalance is basically when you see price action happen just with the wicks. Let me just clear this and show you what exactly that means so you can have a clear understanding. I have a video that I explained everything about volume imbalance. I will link it in the description of this particular video. Look at this. Can you see just the wicks of this particular candle and this wick? The bodies have not connected clearly. Can you see? These bodies are actually connected, but this place is just the wicks. Then it is a very powerful institutional reference point. Price is often coming into that area and then push down. So we've seen price traded into that volume imbalance, and now it is trading down into this particular mitigation block down here. Price may eventually reach here because in the monthly time frame the dollar is basically bearish. But let's see what the lower time frame is going to give us. If we go down to the weekly, we're going to see what exactly the weekly time frame is going to give us. So from the weekly time frame perspective, if I zoom it in, you're going to see what we are looking from the weekly time frame perspective. Now this is what we have from the weekly time frame. Price have traded into this level and then pushed down. For the past weeks, we've seen the dollar has been bearish too, because we've seen this take out this level, take out this level, take out all the lows, and then price have traded down into this level. At this area, we've seen this fair value gap. Let me show you that fair value gap. If I delete everything right here and have a very clear chart, this particular fair value gap is what I'm more interested in. Price have actually traded into this particular fair value gap from the weeklies right here. Can you see? And then can you see a liquidity residing below this low? All these lows. Price have actually picked liquidity below here also. So this is important for us to take notice of. And then look at this. If you look at this very closely, let me remove this and show you that. Very closely, price have actually taken liquidity also below here, this low. Can you see? Price have actually taken liquidity and then push into this fair value gap. That's what makes it more interesting, into that particular fair value gap. Okay, and then price is now trying to push up again, because we've seen this rejection block have rejected price right here. If I expand it, you're going to see that price has been rejected in that area. Now if we are to measure this from here to here again from our Fibonacci. We're expecting price to push because we've taken external range liquidity. We'll now push into an internal range liquidity. Every time price picks external range liquidity, it tries to look for an internal range liquidity. They will look for an internal range liquidity either inside a fair value gap, order block, or liquidity void. Now from this premium level, what we see right here is basically this particular fair value gap. Can you see this particular fair value gap right here? So this is where I think price is going to trade into and then start coming down again. This fair value gap that is at premium, because a fair value gap that is either at premium if you are selling or at discount if you're buying is the most powerful fair value gap. So this fair value gap right here, and then close to it, this particular order block is what I'm looking at. Price may probably trade into this particular place. Remember, from the monthly time frame, we are expecting price to go bearish. So from the weekly, we expect price to do some of these things before heading downward. So that is exactly what I'm expecting price to do, because right here I've picked liquidity below here, picked liquidity below this low. So coming back into an internal range liquidity is only rational to me. Now I will drop down to the daily time frame to look at what is happening there too, so we'll know exactly what we are dealing with from this particular perspective. So now this is the daily time frame. Look at what we are saying. Remember that our weekly time frame fair value gap that price is trying to trade into. So all these areas are full with liquidity. This area, liquidity resides above old highs on old lows, or relative equal highs or relative equal lows. So all these areas, price is going to trade and pick all this liquidity, trying to reach out to that particular fair value gap that I marked out from the monthly time frame. So we've seen price trying to push up to that level because we've grabbed liquidity below this place. As we said, just below this place, liquidity has been grabbed. Can you see this very tiny push outside this level? Liquidity has been grabbed. From there, we have not seen any grab of liquidity because price is trying to create a higher low, because price is trying to reverse direction to obey what we've seen from the weekly time frame. Now this is the last lower high that price have actually printed. So if we successfully take out this guy, okay, if we successfully take out this guy, price is probably going to push to go up from the dollar index. Now we'll go down to the 4-hour and see what is happening from the 4-hour time frame and see exactly what we should expect to unfold for the week. So right here, this is our 4-hour time frame. Remember, it is important we do this to learn exactly what is going to unfold. Now, where do we see price going to from here? Did we have a change of character recently to show us that price is going to go up? Look at this. We have a lower high, lower low. We could not have any lower high from there. We have a lower high, lower low. We have another lower low here. We could not take out this last lower high. We have this lower high right here now. Price have taken out this lower high. You can call this a change of character. If you wish to call that a change of character, which means price have actually changed direction. To rightfully know that, you can use an indicator such as this indicator called Smart Money Concept by Lux Algo. Then you will know exactly where to find your breakout structure or a change of character that we're expecting. Can you see this is actually a change of character right here? So we have actually changed direction from the 4-hour time frame, which means price is going to be bullish for the rest of the week. We're going to completely take out liquidity on all these highs. Can you see these highs we've marked from the daily, which means price is trying to reach out to that weekly fair value gap we've marked. So from this, we know that definitely our DXY is going to be bullish for the week. We've taken out external range liquidity. We've come back to this particular place. Let me show you. This small bullish order block is where price have traded to, this particular place. Okay, can you see this guy? And then we're obviously going to take out this place and go up. So I will stop from the 4-hour time frame right here, because we know the dollar is going to be bullish for the week. This is what we are predicting. The dollar is going to be bullish for the week. And let's check maybe GBPUSD or Euro USD, any of those ones, and then see exactly. You can do it on any pair you are interested in and look out for what exactly we may unfold for the week. So let's start from the daily time frame and see what will happen, because we know exactly what that will do. So we said that the dollar index is going to be bullish, which means we expect what to be bearish. We expect other foreign currencies to be bearish. Let me get this correctly so we can see exactly what is going to be happening for the week. So this is the daily time frame Euro USD. We have this delivery right here. So let's have this clearly and see what is happening to know that we're going to be bearish too on Euro USD. Now, can we see that we've actually taken liquidity above this level and above this level? Liquidity has been taken outside this area because they are called external range liquidity. Now we're going to head down. So if we have successfully taken out this level from the daily, this area, this was the last higher low that price have actually created. If we successfully take out this level, that means we're going to be bearish from this perspective. Now we'll drop down to the 4-hour time frame and look at what is happening. So we have not seen any sign of that level being taken out right now, but we've taken liquidity above these relative equal highs from that perspective. These relative equal highs, this is a relative equal high that we've seen price have actually grabbed liquidity above this place. Liquidity has been grabbed and we're coming down. This was the last area that I'm looking at, this place. If I see the candle body closes outside this, taking out this liquidity, because this is a higher low, this is a higher low, these areas, higher low here, higher low here. This was the last higher low. If price takes out this area and come back, we're going to be bearish from that perspective from the 4-hour time frame. If we drop down to the 1-hour time frame, we're going to have a better view of what is happening from that place. So this is what is happening on the 1-hour time frame too. We have not seen any significant reason why we should go bearish from the 1-hour time frame. So tomorrow Monday, we're going to see exactly what price may do and give us that. So we're going to know from the 4-hour time frame. I usually use the 4-hour time frame. Once I'm able to take out this level, I know that I'm going to be bearish for the week. Okay, I'm going to be bearish, and then I'm going to target all the liquidity below these areas. Liquidity below here, below here, below here, below here, and below here. So these are the areas where liquidity are residing, but I want to start from here. So guys, you can do this on any asset you are interested in to see exactly what may unfold for the week, but this is exactly what I'm looking at from this week to see that I take out these liquidity areas. I'm going to be bearish on foreign assets and be bullish on DXY, guys. Thank you for watching. If you have any question, let me know in the comments. I will answer you rightly. Thank you for watching. See you next time.